buying and selling properties, navigating the market, investment strategies, and more. Unlock the secrets to our success in the real estate game. This is Owning Realty.
Okay, area market updates. What's the temperature in Atlanta? Like, how are the houses selling or not?
No, they are not. These houses are not selling. These people are afraid of this election, number one. And then number two, the rates went down, but then they went right back up.
Yep.
So, coupled with that and the uncertainty of the market, it's just like they're waiting.
Yeah.
Are you guys hearing this as well? Like,
Just to wait, like everyone's saying, they want to wait until after the election.
Yes.
And I am trying to pull people out of, not to like force them to buy, but why are you waiting? Like,
right.
just making sure
Let's
you're not
talk it
thinking
through.
rates are
Right.
gonna drop to 4% the day after.
Right.
Or like, what's that? And some people, it's just a mental. We
I think
are
so.
people, and there's a mental load with election years.
Yes.
Right.
And also rates.
Yes.
So I can understand it. You just
Yes.
don't want to be doing too much at once.
Yes.
Yeah, I think my perspective is a little interesting. I think I have 3 buyers under contract. So I still feel like people are buying, but also that's that really phenomenal program that we talked about. I think maybe we didn't, but that program where they're having all those helpful things.
The buyers are out here.
The buyers are out here.
I have some new ones
And
as
I'm
well.
still shopping
So-
with people, you know, but I'm not seeing the pause necessarily.
Yeah. Right.
Yeah.
Well, what do you think, though? Is it the price point?
And it
Because
could be
we
that,
do
too.
have listings that are great listings, but the price point coupled with the interest rates.
Yeah.
I mean,
It's a maybe $300 difference between
Yes,
where the
it
rates were,
is.
not even at 4, but at like 6.5 to
Right.
6.99 or 6.25 to 6.8, whatever we are, 6.875,
Yeah.
6.99 now.
Right.
Like
that's huge.
it all is. What is it,
Waves.
the bell curve and a wave?
Yes.
Like
Like,
it just goes up and down. That's
yeah.
part of it. So
Right.
this is just part of it. People always think Christmas, you're going to be like, no, everyone wants to enjoy the holidays, but people come out like
They
you
do
just
come
never
out.
know.
They
So
do come out around the
you
holidays.
buy when it makes sense for you.
Correct.
You sell when it makes sense for you. You just have to have an agent that is letting you know what the market is like and what to expect at that moment. And so
Yeah.
you just got to be
Yeah.
Yeah.
informed.
Yep. So another thing to inform you guys on, there is a new blighted tax rule initiative that they're doing. The city of Atlanta and Mayor Andre Dickens they announced earlier this summer that they're going to be enforcing a blighted tax law enforcement rule, whatever, you catch my drift. And basically what it means is that if you have a blighted home, which means it's abandoned, it's boarded up, it's like basically condemnable, I guess you could say, like just in terrible shape, and you're not doing anything with it, they're going to charge you 25 times the city tax rate. 25 times
crazy.
starting January.
So it's not like vacant homes. It's like boarded up, no utilities, non-livable,
Yes.
those types.
Those type of homes. Now they're also doing something too, where if, say, for instance, you inherited this house and you don't know how to get it up and running,
Right.
they're also going to help try to get you started. They also are going to try to take care of legacy owners. It sounds like,
Love that.
where if it's a senior citizen that's living in these boarded up abandoned
that's
houses,
right.
which happens,
Yes.
they're going to try to assist them to get it into a livable, presentable condition.
I like that idea, though.
But yeah, so for those legacy seniors, it's going to be a great tool for them, I think, to help. But I'm excited about, opportunity awaits, you guys.
Yes.
Opportunity awaits. And
We're here for it.
I don't want to displace anybody. Let's be very clear. I don't want to
But-
displace anybody. But the ones that end up being just like no one's checking for these houses, I think it's time to get them.
I think, and I don't know the exact stat, so I'm just going to throw out some
Yeah.
crazy number, but like 80% of the vacant homes, and that's not a correct number,
We made
but
that
a
up.
large,
Allegedly.
a large amount of the vacant homes are owned by hedge funds, and they're
Yes.
just like holding on to
Yes.
them.
And
And
they're-
cities want their cities to thrive, and
right.
so there's a disconnect there. So I think that's why
It's for the wrong
they're
use.
doing it.
Yeah,
Yes.
they're doing it for the wrong reasons. And so it's either shit or get off the pot, right?
So,
So come January, we'll start to see that. So that's news. If you have
interesting.
keep an eye out for that. All right, let's get into today's topic. Y'all ready?
Yes.
All right, so today's topic is home ownership hacks, okay? And so I think a lot of times when people buy houses, there's like a lot coming at you so fast that you
Yes.
cannot digest all of the information of like how to now, live with this new investment, right? And I think we tell you a lot of things,
Yes.
but you retain probably none of it. And so we're going to just go over those items again today. And hopefully this can be a resource for you to come back to and listen to. So first things first, one of my favorite hacks is knowing when to remove PMI off the loan.
Yeah.
Yes.
Okay, so what is PMI, y'all?
PMI is private mortgage insurance. And what the private mortgage insurance is for is to protect the lender in the event that the buyer defaults on the loan.
So like if you don't pay the bill, the mortgage, then they are protected and they get their money back.
Yes.
Pretty much. Okay?
Yes.
It does not benefit you at all.
At all.
Not to
it
be
is a
confused with
requirement.
homeowners insurance.
Right. That's
Not
separate.
to be confused with homeowners insurance. And normally it's mandatory on FHA loans. On conventional loans, it's mandatory if you put down less than 20%, right? There are some special conventional loans that come with no PMI out the gate, but typically PMI is on there. It's essentially another bill, right? In addition to your property taxes, your homeowner's insurance, your HOA, those kind of things.
I think a
How do
lot
we
of
get it
times,
off?
yeah, we get it off. A lot of times, and with the lenders and in the initial conversations, not getting in too deep, is that you can get it off once you have paid your balance down so that you have 20% equity.
Right.
Yes, that is correct. But my clients all know that you can get it down once your balance may be the same. You've gained that much equity.
Yep.
Right.
So at closing, my clients know, hey, once your balance gets down to this, or you see other homes in the neighborhood
Appreciate.
selling for this, this is when you can get it down. I have a client that is 2 years in his mortgage, and he called me like, hey, I'm ready to get my balance, my PMI off, and I ran the
comps.
value and the numbers, and he called, and he got it off.
Yep.
Oh, wow.
Now they're gonna order an appraisal to
Yep.
make sure the value.
And you will have to probably pay for that appraisal.
Yes.
Because that's how they validate your appreciation.
But it saved him
it could-
$200 on
his
Absolutely.
monthly payment. Yes.
Absolutely.
Yes.
And they will not tell you that you have that much value or appreciation. The plan is for them to continue to make money. So it's very important that you stay aware of your house value and stay aware of how much you've paid down on that principal. So just to be clear, you have to buy down the balance 20%, or you have to appreciate and value 20% more than what you paid for it.
And I bet a lot of people that bought 2, 3, 4 years ago have enough to get rid of that mortgage insurance now,
Absolutely.
which ultimately wouldn't have disappeared for another 5, 6, 7
7
years.
years.
So
Yep.
everyone should be check your value of your home and have one of us do it for you.
If you would like.
And see if you've got 20% equity based on your balance and your value and get that PMI dropped.
Get that PMI drop. That's a hack, okay? That's a hack. Put that on there. Okay. Next on the hack list, don't forget to appeal your taxes
Yes.
or / file for homestead exemption.
And the filing really should come first.
Well, yeah, I meant to do that. Yeah. Flip it around.
File homestead
What is a
exemption.
homestead?
What is a homestead, Tristan?
Homestead.
Go ahead, Tristan.
A homestead exemption it's basically a tax break if you are a primary residence, primary occupant. And so you just, once you own the home, you file with your county tax assessor that you are living in the home, it is your primary residence, and then they will give you a little tax break.
Yep. And so your taxes will be cheaper, essentially.
There are people that have forgotten.
Oh my gosh.
We remind all of our clients
do.
at time when they're
Multiple
like, okay,
times.
it's time.
Yes.
We remind them, but they forget, and their
they
taxes
call
are
you.
a couple
And they
$1,000.
call you.
Call you and say,
Yeah. What can I do? Is it
Why
too late?
has my
Yeah.
payments gone up?
Yep.
Did you file homestead
Did
exemption?
you file homestead exemption? Now that doesn't mean that your payment won't go up, but it will go up less than what
Yeah.
it would have gone up.
And just because the previous owner had the homestead, it does not mean that you automatically get it. It doesn't just roll over.
Transfer over.
You have to go in there and file your own homestead.
Yep. And just because you had it on maybe your first home, once you buy the new home, it doesn't automatically transfer. You have to, again, go in there and make sure it's there. So homestead, do not forget to file homestead exemption,
When
okay?
do we file here in Atlanta?
I say anytime. I just tell people to do it
Right after
anytime.
closing? Before it was like January.
Anytime after you close.
Yeah.
They used to say that, but that's what
that's-
got people to forget because I feel like they would hold off and then they wouldn't do it January 1st and then they would forget. So I just say the minute you close, you take your butt down to the county or you go online. They make it really easy now and get it done. Get her done.
Get her done.
Now, appeals. Why would you appeal your taxes?
Okay, so
Hi, Lindsay.
one of my favorite reasons to appeal taxes is to freeze them.
Yes.
Okay, it's like
Maybe you're not going to win.
you're probably not going to win. To appeal your taxes and win is hard, but people do win. And the most reasons why people appeal them is because there's no uniformity in the values, right? They're probably not giving the value to your home property. And with taxes, we want our houses to be low in value so that we have a lower tax bill, right?
Yeah, right.
And so when you appeal them, you're basically challenging the county to say, hey, I think you charging me too much for my property taxes. But we oftentimes lose. And the benefit to losing is the freeze, okay? So you kind of get a couple of years to kind of stop that bleeding, especially if this is your first property. Like that first tax bill can kind of sometimes hit you in the chest. Like it really could hurt your feelings.
There's actually, I don't know if you all knew this, there is a rule, law, regulation. We don't know the words.
I know. We don't have the right words.
There is this thing that if you, let's say I bought this year for $500,000, next year the county cannot assess my home for over $500,000.
Really?
So they can't assess your next year's taxes for more than you bought it for
the first year.
The first year.
Wow.
So everyone that bought this year, look at your tax bill next year and just make sure.
And just pay attention.
That assessment doesn't exceed.
I actually did do the freeze though, and it worked for us.
It-
I hired someone to do it.
Yes,
Yes.
there are companies that
There
will
are
do
Oh,
companies
it.
yeah.
that will do it for
Hack.
you.
That's another hack.
Yeah.
Yeah, that's another hack.
That's another hack, friend, because that's a big part. Because to appeal your taxes can be intimidating.
Yes, indeed.
Because there's some paperwork you gotta get factual, actual. You gotta have evidence.
Right.
You gotta plead your
somebody else
case.
do
And that's not my.
Get somebody else to do
get
it.
someone else to do it.
And there are people to do it. You need to know. Call us.
Call us. Yeah,
We know the
yeah,
people
we
who
know
do it
people.
because I don't do mine. I don't
Yeah,
appeal
I didn't do
mines.
mine either.
And I send it off.
But it's frozen, and I
Yeah,
like it.
and I
Yes.
like that
Yes.
too. All right, so the next hack is biweekly mortgage payment. This is one of my favorites.
Mine too.
This is one of my favorites. They don't talk about this enough. Okay, let's say it one more time for the people in the back. Bi-weekly mortgage payments. Okay, let's all say it together one more time. Okay. 1, 2, 3. Bi-weekly mortgage payments.
Remember that, guys?
Y'all won't forget it. You guys won't forget it.
But why?
why
Why
not?
pay these?
Why would we do that?
Why pay them bi-weekly?
Okay.
What are the benefits?
Yeah.
Well, biweekly mortgage payments help pay down that principal balance much quicker. I think the statistic, Lord, we all know our statistic. But I can use our house as an example. Look, I'm looking at the cameraman, babe. How much have we paid down on our balance? Was it $30,000, $40,000? $30,000 since 2021.
I think, and I just don't remember the
I need to check
stat.
that.
It has, if you have a 30-year mortgage and you're making bi-weekly mortgage payments, it cuts that down by 5 or 7 years. I think it's 7
years.
Yes.
7
But
years.
you guys know how much interest that is? It's like
It's
$100,000 in interest.
interest.
Yes. It's a huge.
Yes.
It is
savings.
huge. Like I said, I think in the last 3 or 4 years, we have bought down our principal $30,000 to $40,000.
That's awesome.
And it's a game changer. And what it essentially ends up being is one extra payment a year.
Right.
When you do the biweekly payments. Now, Some banks don't allow it. So whoever your mortgage servicer is, you do need to touch base with them to see if they allow it. A majority of them, I would say, do, and they don't have a problem with it. And what it looks like is, say, for instance, your total monthly payment was $2,000.
Right.
You're going to pay on the first $1,000, and then on the 14th, you'll pay the other $1,000, still having the same total of $2,000. You're just splitting the payments. And what happens is that first payment goes, I think, towards the principal, and then that second payment, more of it goes towards the interest or the fees or what have you. So it ends up being the same monthly payment, you're just splitting it up. So it doesn't change anything for you financially.
The only difference is there are a couple of months where there's an extra week in it.
Yes.
Like, you know what I mean? So that's where that extra payment is coming in
Yes.
a little bit that helps reduce the interest
principal
and the
interest.
principal.
Yep.
Yes.
So again, hack. Please go look into that. That is something that is game changing.
I have another hack as we're talking about saving money and mortgage stuff. If you ever came into a lump sum of money, $20,000, $30,000, $40,000, maybe you've sold another home after you bought your home. Maybe you just have been saving tremendously. One of my clients just told me he sold a house, told me he paid off his mortgage down by like $40,000 and he was going to make another payment in the future. And I said, before you do that, you need to call the bank and ask them to recast your loan.
Yep.
His payment he made a $40,000 payment. Now he's been paying on this mortgage for 10 so years, but made a large lump sum.
Right.
And called the bank to recast the loan, and his payment went from $1,200 to $600. So now the other 40 that he was going to put down, he doesn't need to because he got exactly, they go back and look at everything, all those payments you've been making, plus the large amount that you've put down.
Recasting.
You can typically only do that once a year. And again, it has to be, it's not just because you've been paying it now for 10 years and you want it recast. It has to coincide with a large lump sum
of
payment.
money.
I don't know what that minimum is.
Yeah, I'm not sure of the minimum either, but
He was able to do it with 40.
Yeah, and
that's 'cause
so
he sold
that's
another
kind
house.
of yeah. I think that's reasonable. I mean, I recently learned about recasting, and some banks don't charge you for it too, depending on the institution. So again, these are things that are such good hacks. Like, please do not sleep on them. Let's also talk about shopping around. So let's shop around that homeowner's insurance, okay? You're not a tree. You can move.
You can move.
Okay? You can move. So, for some reason, everybody gets stuck in their homeowner's insurance. Like, look, I've been shopping around this week.
Yes, indeed.
I'm horrible. I had the same
No,
insurance
baby.
company for like
See,
10 years.
you one of them ones.
She one of them ones.
ones. Horrible.
No.
Yes.
It goes
I
up
know,
every
it
single
does.
year.
It
And I was
goes
being
up.
loyal, but they weren't being loyal.
They're not
to me.
being loyal to
They
you.
never will. No, friend. Mm-mm.
So
Get to it.
Get to it. Shop. And
Shop.
so every year you should be calling. I would just say set a time. Pick your time of the year that you like to sit on the phone and talk to the insurance people.
Right.
January, February, March, you got a whole
Whatever
bunch of months to pick, okay? Pick one time that you call every year and you get quotes on the different homeowners insurance policies and see how much you can change your bill, your monthly mortgage
Right.
payment because you changed the insurance policy.
I've seen people say $400, $500
Easily.
On their premium, and if you add that on top of the biweekly, on
top of the PMI?
yes,
Taking
on
away
top
the
of
PMI?
the
Freezing taxes?
freezing taxes, like the everything.
I mean, the recasting.
we're hacking.
We're hacking.
We're gonna get those payments low.
I hope y'all please give us our flowers for this episode. I'm gonna be expecting some coffee,
money.
gift cards,
Yep.
something, because I'm saving you some coins. Okay,
Yes.
we are saving you some coins. All right,
And then make sure you bundle that. Bundle it.
if you can
If
bundle
you can
it,
bundle
yes,
Yes. And make sure you're getting
Look,
apples to
don't-
apples with,
but look.
with those insurance policies, because sometimes they'll quote you a less amount, but it's not the same coverage. So you want to
Right.
make
Right.
sure that you have your policy in front of you and you're getting exactly what you had before, if
Yep.
not more, for less. So
Yep.
yeah, bundle that with your cars.
Now-
Make sure those policies are covered.
What I'm about to say is, now you can't bundle it with a car if you got a horrible driving record.
Yeah, well, I don't have that problem.
So one of my clients, had ticket after ticket, accident after accident, talking about she want a bundle. Girl, they don't want to bundle you.
No.
They don't want to bundle you, friend. So just leave that separate, okay? So make sure you know when to bundle.
And when not.
When not to bundle. All right, guys. So last on the list is house hacking, okay? What is house hacking? House hacking is when, for instance, you get a duplex, right, which is a 2-family home.
Love a duplex.
Love a duplex. And you decide that you're going to live in one side of the duplex and then you're going to rent out the other side of the duplex. You know what the cool thing about house hacking is? That, look, it's already cool, but...
I'm like, somebody else is paying your mortgage?
Right.
What else?
Somebody else is paying your
Part of
mortgage,
it,
right?
yes.
Like, that's the obvious part, is that somebody else is paying part of your mortgage or all of your mortgage, depending on how you do it. But the other thing that I learned is that you can also, say, for instance, that one side is already rented, you can actually use that income to offset your debt to income ratio to qualify to purchase the home.
Yeah.
Does that make sense?
Yes.
So that's another great way to live for less than. You don't have to do it with a duplex. You can house hack with a basement.
Yep.
You can house hack with a garage.
ADU.
That's ADU. You can
room.
A room. You can do it. There's so many ways to house hack. And if you are in a part of your life where you're flexible and you're not so, tied to like a family or whatever, where you feel like you have to have all your privacy and so forth, that's something to consider. So all these ways to save your mortgage and to spend less every month. Hopefully these things are helpful. And now we're going to go into our audience Q&A.
Our first question of today, Shanna asked, what happens to my earnest money after I've paid it and am at closing?
Okay, so what happens to your earnest money? Well, earnest money is your deposit. So for small numbers, let's say you have $1,000 earnest money, the property is $100,000. You have cash to close, that's $10,000. Well, that $1,000 you've already put down because it's your deposit. So you just subtract that $1,000 from the $10,000, and now your cash to close is $9,000.
So you get credit for it, Shayna.
credit for it.
Shayna, thank you for
sure I'm saying
asking.
that. Yes.
Thank you. All right, and what else
Next
we got?
question, we have Erica, and she asked, I'm a seller. How can I calculate how much money I'm going to walk away with after the sale of my house?
Hey, girl, hey.
To make that money.
She about to make that money.
How does she know how much?
Okay, so the way you know how much money to make when you're about to sell your home is, first of all, you got to find an agent, right, who will break this all down for you. But there's a couple of fees, general fees, that we kind of know off the top, right? It's how much is worth or left on your current mortgage, right, for that property. So we need to know your payoff.
And it's the payoff, not the balance.
Not the balance.
Your payoff will
The
always be
payoff.
slightly higher than your balance. But we'll explain that to you in another episode. But that was just
Yes. So you're going to ask for the payoff amount, right? Which you normally do have to reach out to the mortgage company to get that.
Right.
The other thing we're going to consider is commissions. How much are you going to pay your agents, or are you using an agent to sell your property, right?
buyer's agent.
Or the buyer's agent. Maybe you decide to sell it yourself. Not a good idea, but go off, sis. But, how much are you going to pay your agents? The other cost that you want to consider is closing costs. How much it will cost you for the title or closing attorneys to clear title and do everything from the seller perspective, okay, and, produce documents and all that stuff.
Yes.
Other fees included are your prorated taxes. So because you own the property for so many days until you close, and while you're under contract, you're going to have to pay some prorated taxes. And so those are things that, again, can be calculated based on the home price and the property taxes. So those are just some of the things that are going to come up. Once we have all the costs associated with your loan, then we're going to take into consideration the contract price, or what you're under contract for, and we're going to deduct those expenses from your contract price, right? And that's how you would basically come up with your net proceeds. So there's a lot of ambiguous numbers because you obviously don't know a lot of them, but that's why you need an agent to kind of walk you through and find all the answers to those like more precise questions as far as like taxes and stuff like that.
And you will, I was trying to remember, it was Erica, yes. You will also get a little bit of extra money back after you've closed and all the dust has settled. You can cancel your homeowner's insurance, so
Yes.
whatever is remaining left in that premium, you'll get that back.
Yep,
There'll be little bit of interest that's left in from your mortgage company. They'll give that back, and whatever's left in your escrow account from your taxes and everything else, that comes back to you too. So, little surprise.
Yep.
After you've moved, you'll get a little bit more.
So you could really come up, sell your house, and if you need somebody to sell your house, I'm just saying. We're here, Erica. We're here. For you.
Shameless plug.
All right, guys. So we're wrapping up this episode. Again, this was all about home ownership hacks. I feel like that was very helpful.
A lot of
Really
good hacks.
A lot of good
I'm about
hacks.
to go relook at my homeowners.
You
insurance.
do.
Go.
You do, right? And I need to text Ryan because you're not going to do it. So we need to text Ryan and make sure. But yes, so look up all these hacks. Put in the DMs, comments, whatever. And if you have a hack,
share
a
it.
hack that you think that we didn't discuss, that you think is dope, please share it with us. We might have to spin the block on this episode.
Yes.
This is a great episode.
So definitely drop those in the comments. Don't forget to like, subscribe, and share. Share with everybody that you think is thinking about buying a house. We appreciate you so much, and we hope you have an amazing day. Take care.
Thank you.
Ciao.
Thanks.